Rich. Welcome to the channel. All right, so here we are. It's been a while since I was on. Trying to see if this is working right now. So it seems like the operating system has changed. So I'm gonna try to look for myself right here and make sure that I'm live streaming correctly, so that I can, make sure that I am actually on here and see how we're doing. But of course, I can't find it. So my internet is actually slow for some reason, and we'll figure it out here, buddies. Anyhow, kind of a wild week when it comes to trading, I'll say, and just very excited to see what the future holds when it comes to us traders. But as of right now, let's view our channel. All right. Um, I did put this link on the Discord. I'm trying to figure out a lot about the operating system. I usually just go live. I used to make videos and then I post them, right? But going live is a whole different beast. And, I'm just trying to make sure that I'm doing it correctly, right? So at this point, let's see what's going on. So it seems like it's working a bit right now. Let me move the camera some just so you guys can get a better view. Let's see if this works. I think it's working a little better now. Over here, you're going to see, I don't know if you guys can see it, but it's the little Mario Brothers little decal my son decided to put on the wall. I think it's kind of cute, so I just left it up. So all right, it seems like I do see myself here, and that's a good thing. So we're gonna leave it at that. Welcome. Very excited for the coming up week, and very exciting last 4 weeks. It's been a kind of a roller coaster market, right? But I have had fun. I don't know about you guys, and I don't know about what's going on with the way you guys are trading. But if you guys have been taking defensive stands and selling covered calls and kind of waiting for the RSI, right, to show you bottoms, and then you go under that bottom and do cash secure puts, you've been killing it, all right? Because there's a lot of volatility in the market. And right now, I have to say I've made a few dollars this past 4 weeks. I keep increasing my positions. I keep on kind of just acquiring more shares of the companies that I want to hold for less money than I would have bought them if they were like a month ago. I liked these companies a month ago, 2 3 months ago, but to me they were kind of frothy, right? But just because a company's frothy and we're at 52-week highs, it doesn't mean it's a bad company. It just means that companies are doing and the market is doing what it's supposed to do, which is go up. Now, we're in a little bit of a correction territory right now, but let's see. Let's just dive in to what's happened this last week, right? I'm going to start with NVDA. It's one of the savage stocks that I've been watching. I trade it, fairly often, and I finally took a larger position and did some cash secure puts for $100 when it hit, I think, $108, $107. I just knew it was gonna bounce up because it was oversold. It does not mean we're out of the woods just yet, right? It means that for the moment we're in an uptrend. I also do know that NVIDIA is going to have um, their big event of the year coming up in San Jose this coming up week, right? So what does that mean? Well, that means that they're probably gonna showcase new products, right? When they showcase new products, that's when the market goes usually excited because Nvidia has been carrying this market. Them and Tesla have been carrying the market for the past year, I believe, and right now they're going to come up with new products, right? That's kind of like when Tesla came up with the Cybertruck. Well, it went up because people were then excited about the Tesla truck, right? So that was over a year ago, a year and a half ago. A lot has happened since then, but it does not negate the fact that Tesla was at 52-week highs not too long ago. So if you were smart, you were able to offload some cash secure puts and take money off the table, right? Right now, Tesla is very volatile. It just went to like 220, I think, 230. So if you saw the Bollinger Band, right, you saw that it was oversold. So, some nice cash secure puts would have been good there. I already had $190 cash secure puts to 2027. I took a big chunk off. So I'm just waiting to get a sign at this point. But again, back to NVIDIA. Uh, you know, it's having its annual conference in San Jose. There's going to be a lot of the artificial intelligence heavy hitters there, right? We're going to have, I think, C3.ai, AMD. It's going to be one of those where I think Snowflake is probably going to be um, showing up, and also Snowflake is going to have their yearly conference in the next month or two. So it's very exciting for anybody that's looking at the artificial intelligence market, because it's the next frontier. It's coming. It's just a question on how long it's going to take before everybody ends up adjusting to it, and then just coming into grips that that's where we are, right? There's going to be a lot of new jobs created. There's going to be a lot of jobs that are lost, but in the grand scheme of things, we're here as investors, right? And we are here to make money. We are not here to judge. We are not here to say who's right and who's wrong as far as politics. I have my own personal view. It is what it is. But this is why I like the market. The market doesn't care whether you are black or white, Chinese, Hispanic, whether you are a Republican or a Democrat. The market just cares that you dump money into it and that you invest it and that you do the best that you can, right? So that's what we do. We have our money that we have in the stock market, and we have given however much to your brokerages, and you've taken a stand, right? And your position is set, and now you're just about crossing your arms, right? That's what we do. But in the meantime, you gotta get paid, player. That's the way I see it. If a company is going to be in my portfolio, um, it's gonna have to pay rent. That's the way you gotta look at your portfolio, as a building. Look at your portfolio as a building, right? And look at all the companies that you hold as tenants. They have to pay you rent monthly, some weekly. It's all up to you as to how much you're going to rent, and how much you're going to charge for that rent. Let's see what we got here. Brent, good Sunday afternoon. Hey, what's up, Brent? Good afternoon to you, my friend. Z Estate, what up? Investor plays touted QBTS and RGTI as quantum companies to watch at NVIDIA companies. Mark C. Yes, I am actually looking at those, especially RGTI. Also looking at AAOI, which actually I hit a home run. I was not expecting it to be so quick, but I think Wednesday or Thursday I was looking at AAOI. I've been looking at it for a while, but it's down. It was downtrending. It was oversold, and I saw that just divergence in the stock, right? And when you see divergence, that means it either has potential to the upside or to the downside, and that's where your um, research comes into play, right? You know what you want to buy, you know how good a company is, you've seen their prospectus, right? And then you have to make up your mind. So I came in, I bought 300 shares. I came in and I did some cash secure puts on it. And within a day, it went up 100%, you know. So I automatically, after hours, I just sold. I didn't even look to put in a strike price. I just went at market price because I knew it was going up too fast, and I think it was like $30 or 29 something when I saw that it was at, and it sold at like 28.90 or something. So, anyways, I made money, right? That's the whole point of it. And then the next day, I dumped my cash secure puts at around 50% of profit. So there were cash secure puts 3 months out. If you make 50% in one day on a cash secure put, get out because you've already, if in a day, a 3 month investment, right, a 3 month position, and you score 50% in one day, that means that for the next, 3 months, you're going to have to wait for the other 50%. That's just silly to me. You take the 50, take the money off the table, move on, right? Zeta State, Uncle Bruce loves you. Yeah, man, I love Uncle Bruce too, man. He's definitely my mentor, one of my mentors, and I really do appreciate his guidance. I'm always lurking, man. Although you guys don't see me as often as you guys were in the past, on the channel, commenting. Again, I don't, for the people that are new to this channel, I have three kids, right? And they're all like, kind of young. They're like 10 and under. And they require a lot of your time, as well as the wife is taking some time off of work, a couple of years. And I'm basically the one that decided to go back into the work field. And, I'm always busy. And when I do have free time, um, I like to spend it with my family, and then we go places, right? We end up taking little trips, or we just stay local. But for the most part, I like to spend time with them, right? Because at the end of the day, the reason why we invest is so that we can have more freedom, right? And that means financial freedom. That means the freedom to just pick up and go somewhere at any moment's notice. And that's basically what I'm trying to help people watching this channel achieve. I'm looking for the channel that I was looking for. I mean, I'm basically trying to have the channel that I was looking for when I started investing, and there wasn't such channel. And I've been looking for it ever since. And I said, you know what? Sometimes you have to be the data point you're looking for, right? And so I decided, hey, I'm gonna pivot my channel from credit cards and points and traveling for free, staying at hotels for free, to talking about the stock market. I'm still going to talk about credit cards here and there, but I'm going to like shift my approach to the stock market because I'm heavily invested at this point, and I have a very good position. So, at this point, it's all about basically adding to my positions, and then just seeing what's out there, and also kind of helping people see a different take on different companies they may be looking at, or maybe just seeing what my positions are, and maybe if that gives you a better idea on where your positions are, that could also work, and trying to grow this channel, right? So anyways, I'm deviating. Let's see what we got here. Ed, hello, what's up, Ed Premium? Hey, what's up, Poto? Happy Sunday, my man. Yes, sir. Alex, good evening, Sam. Hey, good afternoon, bro. It's barely 12 o'clock here. So I don't know where you are, but Lurker, what's up, Wrench? Nah, man, no timeout just now. Don't do that. What's up, Jared? What's up, man? Yeah, Nala, tell Savage to give you a rate. Why? Why, man? You know what? I'm too scatterbrained for that. Again, I was just talking about my kids, right? And sometimes I want to make a video, right? And I get everything ready. I take my notes. I take copious notes, right? And then I start making my little my show in my head, and I put it down on paper. And then my kids run to me, and they start saying, "Daddy, Daddy, let's go to the park. Let's do this." And then they start saying, "Oh, you worked so much this last week. We didn't see you. We miss you." And so I end up going to the park, or I end up just going to, they love Dunkin' Donuts, man. So I take them to Dunkin' Donuts, or they love burgers. They love Five Guys, so we'll go to Five Guys, or we'll go for sushi. My daughter loves sushi, so we'll go for sushi, man. But that's what happens. Life happens, and I wish I could have more of a of a set approach, right? Where I tell you guys I'm gonna be at 12 every Saturday or every Sunday, and let's do an hour. But it just doesn't happen that way. And nobody pays me for this. I don't ask for donations. I just I come up here and I give you guys kind of like a piece of my brain, so to speak, so that you guys can see, what my trading is like, and then compare it to yours, because that's what I do. We're on the Discord with Poto, and with Lurker, and then Alex is on the Discord as well. And then I see, sometimes when I'm at work, your trades, and I'm like, idea, right? I'm like, and I start looking at the options chain, and usually we trade the same stocks. And somebody might actually have a different graph than I do. So I start looking at what the divergence is, or why there looks different. Are they looking at the 4 hour? Are looking at the 2 day? What are they looking at? And so sometimes I miss things, right? I miss things. And sometimes I give people my perspective, and they're like, oh shit, I had not seen that. So that's kind of the greatness about having a community, that kind of has the same goals, right? And at this point, not to deviate, but it's my channel. I could talk about whatever I want, so that's kind of cool. But on Friday, I actually was in my head, right, and I was just looking at my portfolio, and at the moves I've been making the last 2 months, and I'm making a killing in the stock market, right? And I'm sure you guys are as well. But I just thought about where I was 5, 6 years ago, 10 years ago, right? And how I used to just buy low, hold, and then sell, right? And sometimes I hold for a year or more, and I'd be okay, because you don't know what you don't know, right? So I would just then, hold the stock. I invest 20,000, sell it for 27, a year and a half later, and I just didn't know how much money I was leaving on the table. But now, because of GME, I was able to bump into Uncle Bruce's channel, and then it just so happens he was looking at APOI, right? Or I was at APOE. I forget. But it was SoFi, right? It was basically the company that turned into SoFi. And so I paid attention to his channel. I saw that the people were asking questions along the same line as I was asking, and it became part of the community. And now, I told him, and I sent an email to him, and I said, hey, I just wanted to thank you. There's a lot more that I told him, but I basically said, I just, because of the approach you've taken and how easy it was for you to explain things, I was able to see the market in a different point of view. And instead of just holding, I still hold, because, again, for those that don't know me, I only invest in companies I'm willing to hold for 5 years, right? But if I'm going to hold a company for 5 years, what am I going to do with that money meanwhile, right? Like, there's interest that happens. There's inflation, right? So money devalues. In the meantime, what happens, right? Now I sell covered calls and do cash secure puts, and I put it all together, and I am able to bring in a lot of cash. and sometimes I use it to pay bills. I pay the mortgage. Um, I use it to pay for trips, right? And those trips, sometimes are quite pricey, and they're, financed by the gamblers, right? We all are the casino. Everybody that's on this show watching me right now, they know I'm the casino. They're the casinos, and we end up selling covered calls or cash secure puts, taking premium, and then use that, you know, um, however we want it. I personally buy more stock, or I will wait for down days and then do cash secure puts with that same cash secure put money, and then take that premium to buy more stock. I mean, it just, there's so many different ways to skin the cat, right? But at the end of the day, if you have, a naked cat, that's pretty much what matters. Um, let's see here. Timeout. I'm about to lose a lacrosse game. Oh shit! You know what, man? I went to school back east, and my college actually had a fucking kick ass lacrosse team, and I used to do sport back in the day, and whenever I work out, um, in the gym, it was usually the lacrosse players, the ones that were able to keep up with my workouts. It was not the basketball players, it was not the football players, it was the lacrosse players. Those motherfuckers are strong, bro. So yeah, I we used to play ultimate frisbee with some of them, and then we used to just rock each other. It was fun. It was fun. They were as crazy as the wrestlers were. So all right, here we go. Uh, upcoming market, man. Uh, don't get caught with your pants down, right? The coming up week, um, I see kind of the market trying to recover. But I don't know if you guys, some of you guys may be on the Discord, some of you may not. But on the Discord, I think last week or the week before, I basically said we have a dead cat bounce uh, coming up, right? We had been, I think, downtrending for 4 weeks, and you look at the stocks you're holding, you see you're oversold, and then you just say, hey, now I ended up, I think, getting rid of Roblox. I don't know if I told you guys, but I ended up selling my position on Roblox. I sold Palantir. I sold AAOI. um I sold CoStar Group. Uh, all my Matterport shares got turned into half CoStar, half cash. I was given the cash right away, and I put it to work. But then I was holding onto the CoStar Group um, stock because I still had covered calls outstanding. And this week I put in some stink bids to buy them back because I saw some oversold positions, and I saw the market was probably going to have a dead cat bounce. So I figured I'm going to go in. I still made a profit, but it wasn't as big as it would have been. However, when the stock moved up $3, I sold my shares for CoStar, and I took in the profit. And then once I turned that into cash, I was able to go and take some positions on, I believe, AAOI and Ion Q. I was able to take some positions on RXRX. I think some SoFi positions too. I think I sold some $10 cash secure puts when SoFi hit 10. I think 1060, 1075. I think that was it. That was my trigger point. And then I ended up doing $10 cash secure puts, $11 cash secure puts. For like I think June, July, something like that. And then SoFi bounced back because it was oversold, and I was able to take in 40-50% profits and then take that off the table, and then pivoted, I think, to Neo. I ended up buying some Neo calls, which I don't recommend because we never do. However, I was fairly comfortable doing so because it was premium money from cash secure puts that I took, and also I was totally okay losing that money to zero. So I do not recommend buying cover calls. I recommend selling them, but I'm stupid. So sometimes I'm going to put my hand in the burner just to see if I get burned because I'm stupid. But don't be like me. Don't be stupid. However, I do, again, I read the graphs. I know when we're oversold, and I took, everything could go back, it could go against you at any point. However, I bought calls that were expiring in 2027, what gives me 2 years, right? So, um, not saying that guarantees that I'm going to make a profit. It's just it gives the market 2 years to go up or down, and Neo to go up or down, and it's probably likely was going to go up, then down again. It's been doing that. So, anyways, I was able to take a profit then because it ran up, and then I got rid of those calls. Anyways, I've been making my money work for me. So I suggest that you hold cash. Cash is king right now. Um, Team Casino, yeah, baby. What's all this cat talk, Savage? Beach boy, what up, baby? Yes, no range for Nala, for sure. All right, so yeah, don't get caught with your pants down, right? That's kind of my view on this coming up trading week. We do have a lot of exciting things that are going to happen, right? NVIDIA is going to have, I said, their yearly meeting or event where they're going to have an artificial intelligence fiesta, so to speak. And they're going to come up with new products. Everyone's going to showcase new products, and I'm very excited. And so, what did I do? I ended up taking a position on cash secure puts when it comes to NVIDIA, and it hit $108 or something like that, or I don't know. But anyways, I ended up taking a big chunk, and I'm expecting it to go back to like 130s, maybe the 140 area. I'm gonna buy those cash secure puts, and again, I took that cash secure put money and I bought more Nvidia. I think at $108, $109. So just adding to my position, right? And that's what we do. Um, Companies are oversold. At least they were. So I would look at the case by case basis, right? So look at if you're holding SoFi, look at SoFi. It does it look in the RSI as it is oversold. Have we kind of capped a little bit, and we're gonna come back down? Are people gonna take profits? I mean, these are all types of things that you have to ask yourself whenever you're investing, right? Um, and You have to make up your mind one way or the other when it comes to investing. Um, what companies do you like, right? If you know that SoFi is oversold or overbought, whatever it is, if you're somebody that knows SoFi is going to be worth $100, 5 years from now, why would not you take a position right now? It just makes no sense to me. The only reason I have not bought any SoFi, and I've only been doing cash secure puts, is because I have a massive amount already, a massive, and the average is $8. So, until it hits $9, to me it doesn't make any sense to go and add to my position because I have more than 10,000 shares. So, again, that's just my case, right? But if you don't hold any SoFi and you've been on the sidelines looking at when to get into SoFi, I recommend that right now you start looking at an entry point, right? Be it $11, be it $10, but make up your mind. Stop staying in the sidelines watching everybody play. Get in there. Cash secure puts are a good way to go. I like 2-3 months out cash secure puts because those move very fast. But you can do 2026 cash secure puts if you think we're going to be going into a more bearish stance when it comes into the market as a whole, right? Do 2026 cash secure puts, do $10 ones, right? Take in a big chunk. I think they're like $2 or something like that, or like $1.75. I don't know. I haven't seen the option chain. But I mean, why not, right? Um, I I called for a dead cat bounce on the Discord, and I think that we're not out of the woods just yet. We have been trading downwards, right? There's been a lot of downwards pressure for the last 4 weeks. Okay, we've had one really good day, one real good day. Does that automatically means we have a reversal in our hands. It's just, it's funny to me how whenever the the markets are, bleeding red, we have one really great day and people automatically, oh my God, it's done. The bad days are over, and they start, it's a psychology thing, right? And they automatically start thinking, oh God, there's a reversal. Here's the pivot. Let's do it. Um, but what I think happened was, because we were oversold, I think a lot of these institutions, right, ended up kind of taking bites, but they don't take little bites off of the market like you and I, where we buy, 100 shares, 50 shares. They buy 500,000. They buy 300,000. So you have 5 or 6 institutions buy 300,000 of the same stock. Um, you're gonna see some upwards movement, but what you have to pay attention is at the it's the volume, right? If the stock is going up and the volume is still down from its average, you have what's called the divergence, my friend. So don't get caught with your pants down. Don't go get the Vaseline, man. It's not, it doesn't mean that we're good. It just means that, there's been buying pressure on it. So it's an upwards pressure, right? But it's fugazi, man. It's not real because it's the volume is down. So the stock has to follow the volume, right? Think about that. See two things up, right? So you have the stock value and then you have the volume. Both things have to go up at the same time, parallel to each other, right? I'm using big words, I know, because I'm dumb. But I whenever you see one go up and one go down or the other, it's divergence. That's a divergence. And so that you have to be cautious, because it means that either to the upside or the downside, you're going to end up either, blissful or with a hurt butt. So I suggest caution. Um, it does not mean that you can't sell covered calls, though. That's one thing. So whenever I see divergence like that to the upside, right, and I see, let's for example, AI, right, or Unity, and the volume is low, but they go to like 25, $26. I'll automatically sell $25 covered calls for 3 months out, take in $3 or $4, right? And then the stock starts dropping within a couple of weeks. And then I end up making 50, 60%. I get out of that trade because, anything can happen and the stock can go back up. We don't know, but I do know for sure then and there that that stock is worth, at least the options that I sold are worth 50, 60% less. And that's when I take my profit. That's what we call taking money off the table. You're making it real. You're closing that position, right? And so when it comes to companies like SoFi, for example, right now I see a divergence, right? Volume is down, stock price is up, and you may say, oh no, hold on this day the volume was up. Yeah, but look at the overall trend, right? The trend is your friend till the end, right? So just look at the trend. Is it upwards trending, downwards trending? Where has the volume been in the last 10 days? And then average it out, right? And then see, do you have a divergence? Um, Kathy Wood ended up dumping 4.7 million shares of SoFi, I think, last week. Why? Because Tesla is the largest holding, right? So I think she got into SoFi when it was at $6 or $7. She sold at 11. She made a killing. Okay. So it's not like she's selling at a loss. She made a kill. But again, remember, she's not going to get into this stock um, until 30 days from whenever she sold, right? Because she has to use that for tax purposes, right? She doesn't want to go in and buy it at, less than what it was, because then it just the wash through sale, all that stuff, right? Tax loss harvesting and all that stuff. I mean, she did take a gain, right? So I guess that negates it. But if she was to go under, I mean, I don't know. I know there's a reason why you have to wait over 30 days. But I can't put it into words right now because I'm dumb, right? But I do know one thing. I do know that there's a divergence in stock since December. All right. And I think companies like Tesla, if you're in it right now, take the profit. Nvidia. I think Nvidia is one of those rare monsters, right? That everybody wants it to be up, so it's going to be up. And I think we're gonna have this event this coming up week, and I think we're gonna probably have an upwards movement again. But overall, I think Nvidia is going to go under 900. I'm sorry, they split. Nvidia is going to go under 90 for the summer, I think, personally. So I took my position. I took my position. I said that I'm going to buy Nvidia for $100 in 2026 January, and I got I think like $15, right? So I think 14, $15. So I'm essentially buying it for like 86 bucks. There's nothing wrong with that. And if it happens, great. I finally have a position, and I didn't take my position in the 150s, the 140s, like a lot of people did that right now are holding the bag, especially if they don't sell covered calls. And this is exactly what we do, and this is why we do it, so that we can take big chunks off of stock that we're holding, and hopefully you guys are selling for more than what you bought it for. I don't recommend selling covered calls for less than what you bought the stock, because then you'll be at a loss. However, again, for tax loss harvesting purposes, you can also do that. I ended up actually rolling this week on some positions. I think it was Arch and Riot were big positions that I just saw that I was down under, because I sold some $10 um, cash secure puts on Riot. I think Big Bear AI. I had some $5 and $6 cash secure puts, and I ended up moving them to January 2026 because the stock is down. However, I don't think it's going to stay down there. So what did I do? I ended up taking more premium in and then moving them over to January 2026. And I think the $9 or $10 Riot cash secure puts, I ended up going into like nines or eights. So I ended up taking collateral back, right? And I also ended up getting premium. And I think Big Bear, I ended up taking like $1. I went from being $6 to fives. So I ended up getting $1 back in premium, right? $100 per contract. And I ended up getting like, I think 60 cents or 40 cents, something like that, to move to 2026. So again, always staying, um, you know, in a position where I think the stock is going to be above. But if it goes under, it goes under. Then, fine. I'll use it as a tax loss harvest later on. But by moving to January, I give myself a lot more time to kind of think about what to do with that stock. And it also gives me more premium. I'm able to take in my collateral back so I can use the cash right now. And I'm good until December. I don't have to worry about these till December. And if they're at a loss in December, then I'll just buy them back for a loss and use that as tax loss harvesting, because I'm doing quite well. So then I'm going to be able to offset my capital gains with some of those losses. So then I'll have to pay less taxes. And that's a great problem to have, right? You want to be able to pay some taxes. I actually got into this conversation with someone from work, I think, the other day, because they were looking at Palantir. I think they kind of listened to me when I was talking about Palantir, and it was, I think, $10, and he ended up buying some. I think he bought like 400 shares, and he didn't write covered costs on it, but he ended up selling for over $100, and he was just like, holy shit. And then he said, I'm expecting a huge tax bill. Like, damn, I hate paying taxes. And I said, okay, well, like, look at it like this. Do you rather get money back on $50,000 that you're making a year? Or do you rather pay 15% taxes on $150,000 because you made that much more money? That's a difference of $100,000 in the year. And now you're paying $15,000 off of that. So either you get $5,000 back on 50,000, which would be 55,000 in a year, or you pay 15,000 on 150,000. That means $135,000 a year. Why wouldn't you want to make more money? I am totally okay paying more taxes if it means I'm making more money at the end of the day. And guess what? Those taxes, I'm going to pay them with my credit card. And I'm gonna basically apply for one or two new credit cards. I'm gonna pay my taxes with those credit cards, and then I'm gonna hit some promos that they may have. For example, I think American Express sent me something where I will get $125,000 if I move my gold card to a premium platinum card, right? And I have to put $6,000 spend on in 6 months. So to me, that's a given. So basically, I pay a little more in an annual fee, yes, but then I would be getting $20 every month for the I think the Hulu premium package is called. It's got like Hulu and the Disney Channel and ESPN, right? For like $19.99 a month. That's $240 in a year. Well, that credit card is gonna give me back $20 every month when I pay for those services with that credit card. So I'm making $240. Again, I'm also gonna get money back from Uber, I think, and I end up getting I think $15 a month in Uber credits, and I think $50 in December. So that's $200 that I'm getting back, and I'm always using Uber. So whether I take it, I use Uber Eats, right? Sometimes I work, and my wife doesn't pack my lunch, or I don't want to spend $20-$30 in a meal in San Francisco, because that's how much a meal is in San Francisco, is $20-$30 easily, right? So what do? I use Uber Eats to go and order something, a sandwich at a restaurant or something, and then I'll go pick it up. And it's like 14-15 bucks. That's exactly what I get in credit. And so it offsets, right? So then I get $200 back, $200 back on Uber, $240 on the digital subscriptions. That's $440 back, right? And then I end up getting, I think, $200 back on my airline of choice for a credit. So that's $640 I'm getting back. So yes, the credit card is worth a little money, but I end up getting more in credits. And then don't forget the 125,000 points that I'm going to get for spending $6,000 within 6 months on it. Those 125,000 points, my friends, I'm going to end up switching over to Hilton. Hilton is then going to give me around 300,000 points for those 124,000 points, because they end up, I think, giving me 150% more, sometimes 250% more, something like that. But anyways, I turned those points then into nights at the Waldorf Astoria. Waldorf Astoria, wherever I stay, or whenever I stay there, is easily $800, $900, $1,000 a night. I can easily get 4 nights out of Waldorf Astoria with those points, but because I have a credit card that is a premium credit card that gives me diamond status, I get a 5th night for free, whether I pay for it or is redeemed in points. So I basically stay for 5 nights at a Waldorf Astoria, where I would pay $1,000 a night. So that's basically $5,000 that I'm going to get for what? For paying taxes with my credit card, and that's a win. Anyways, I'm going down the rabbit hole, I know, and I don't want to bore you guys with my little credit card point schemes, but just that's how I roll, man. I'm able to turn, paying taxes into a positive thing. And that's what basically I'm trying to get through, is you should turn that into a positive thing as well. Instead of complaining you have to pay $15,000 on the $150,000 that you made this year, you should look at it like, holy shit, I made $150,000. I will gladly pay $15,000 as opposed to getting money back, when you're making $50,000. That's a $100,000 difference. Whoa, I'd rather make $100,000 more. That's just my point of view, right? All right. Volatility to the downside, baby. That's what I see in the future. Just look at the macros, right? Look at the tariffs talk we have going. Look at the economic wars we're trying to create with Europe, right? Mexico and Canada, which are our biggest trading partners, um, not looking good, man. And I get it. I know what the executive branch is trying to do. They're basically trying to play hardball, right? But you can't play hardball in bad faith. That's the big difference, okay? Especially not with your neighbors. Um, I got into this big conversation with one of my college buddies' father one time, where I was in a relationship with this chick, and we had issues, and I basically said that I was gonna do, I was gonna put like I was gonna put Nair in her shampoo or something like that. It was something awful, right? I was just angry, and then the my friend's dad just said, "Don't be stupid." He's like, "Don't make enemies of those who you sleep with, right? Or don't make enemies of those who are next to you, because they can do a lot of damage." That's the way I see these tariffs playing out with Canada and Mexico. It's like we should not make enemies of trading partners that are so close to us, because yes, we had a lot of vested interest and they have a lot of vested interest, and it may seem like we have the upper hand, but I don't think so, because we are in a lot more of a fragile state than people think we are, right? Look at Nebraska. They made a decision. I think 50% of their labor went away, and now they're looking to go bankrupt in the next 6 months. Not a good look, right? So careful what you wish for. It's one of those things. I would like for us to find equal footing with these countries, and end up coming into an agreement of like a 15% tariff. And then conversely, they would do their tariffs. Um, and for us to build more manufacturing at home, I think that it just takes a long time, right? But um, you cannot shoot yourself in the foot when you have long-term ideas and long-term goals, right? And so that's kind of where I'm going with this. And I just don't see this administration having the foresight and the patience, um, to calm the markets, which is great for us because we are option sellers, right? So the more volatility, the better. And so yes, I think there's going to be ups and downs. It's going to be a lot of pain, of course, but look at where we were 3 years ago and 4 years ago with COVID, and then it was just like the market just tanked, and people were just like, bleeding left and right of their portfolios. They jumped out, they capitulated, and then people like us ended up buying at the bottom. We bought SoFi at $4, Palantir at 7. I bought AI at 10 and 11, Unity at 13. I mean, wow. I bought Roblox at 23, $24. And I just got rid of that position. I sold for like 70, I think, or something. But anyways, what do we have going here? Not a lurker. Beach. What's up, Beachy? All right. So premium on the option saying pants down and Vaseline time to put on. Yeah, buddy. Ed, with Tesla 250, is 295 too close on the call credit spread for 2 weeks out. Was about 16% above and bought it. Does anyone follow Ron Walker? I do not follow Ron Walker. S&P 500. I don't follow many people, man. A lot of people are very biased, and I try not to be. And I know it's hard, but I'm kind of more like Uncle Bruce-ish, right? Like I'll give you the data, and I trade based not on feelings, and that's the hardest part. I actually talked to him. I'm sorry, I wrote Uncle Bruce a couple of days ago, and I told him that if anything, I did the hard work, right? Because I'm the one going through it. Um, and I'm the one kind of managing my portfolio, right? He's not telling me to do this, that, but he does give me guidance. But I appreciated him, and I told him I appreciate his guidance because he was able to calm me and basically say, it's okay to be patient, learn to be patient, have patience, because the stock's not going to do what you want it to do. The stock is going to do what it does, and just look at what it's doing and then react to it. um the times when it's okay to be proactive, it's when you've already seen a trend, right? When you already have a good idea on how the trends are going and where they may go. Nothing's for sure, right? But that's when you have to take a position, and then use your experience and your research to take a position. Example: SoFi went to 1080, 1075, and I had a nice amount of money stashed away. I said, you know what? I'd totally be okay buying Tesla at $10 minus 85 cents, because that's what the premium was for those cash secure puts. And I ended up, selling cash secure puts. I think it was like 10 of them. Um, and so again, market is downtrending. You look at the RSI, Bollinger's. You look at the 4 weeks that we were down. You knew it was oversold. So, but again, is it going to stay oversold, or is it going to keep going down? And go and meet other resistance? We don't know. But I was okay taking that position because I'm okay buying SoFi in the nines. My average is 8, so I average up. But again, I'm taking premium now, with the knowledge that we're oversold, and I saw a rebound happening. It doesn't mean it was going to happen, but that's where your experience, right, and your research come into play. This is why we study those graphs, right? This is why we study Bollinger trends and RSI, and this is why we look at DMAs, right? So that we can then make an educated guess and say, this is how I'm going to use my money, and adverse my risk, right? I'm going to lower my risk by hedging and doing this and taking a better position. And so that's kind of how I traded these last few months. Um, like I said, volatility to me is going to be kind of the word of the year, and to the downside. That's just what I see. Of course, I could be grossly misreading it and wrong, right? I could be wrong, but I am hoping for a recovery. And again, I'm ready for it. I've already sold covered calls for 2026 and even 2027 in the past month or two, right? Even in December, I was selling $45 AI calls, $40 Unity calls. I already sold a massive amount of SoFi $15 covered calls for 2027 and $12 calls for 2026. And I'm okay because again, my average is 8. If I get 100,000 shares taken out at $12, oh well, right? Oh, I mean 10,000 shares. Oh well, then I get $120,000 on that day, and then I'll be able to then use $120,000 as best I see fit. So I'm winning. You can't cry over spilled milk. And I guess the stock could be at 16 that day, and I'm taking a loss, right? But is it? I mean, how much money did I already make on premiums in the last 3 years selling SoFi covered calls? I'm okay taking that out. That's why I chose $12. This is why I chose 15 in 2027. And that's what when I'm saying that you have to take a position and you have to make up your mind. That's exactly what I mean by it. It's like you have to say, hey, I bought this stock at this price. I'm okay selling it here. I'm okay taking this much premium so that I can use that money now, right? What do we have here? What's up, my friend? I know it is not the topic, but I want to thank you. The video that I watched, the Alaska credit card, making our trials. Oh, good. Hey, man, no problem. Chambe. The Alaska credit card is really good, especially if you're in the East Coast, in California. I mean, sorry, in the West Coast. Um, it's good because we have a lot of hubs from Seattle, San Francisco, LA, and it goes. You can go to like Hawaii, because Alaska goes to Hawaii, and you take some really awesome trips, and then you can use those miles. Those miles are very valuable, and I think they're one world partners, so you can start looking at flights with partners to like Japan and stuff like that. It's pretty cool. I know Alaska goes to Mexico and Costa Rica too. So don't discard the idea of maybe going to like San Jose, Costa Rica, right? And seeing like what's out there, or like Puerto Vallarta, Mexico, or the city of Mexico. It's absolutely beautiful. Great food. The people are amazing. But again, Hawaii is absolutely gorgeous. Waikiki in Oahu is awesome. Maui was actually kind of like my favorite, but the fires kind of messed it up. But I'm sure it's gonna come back, right? But yeah, no, good call on the Alaska credit card, especially with a significant other. You can use the buddy pass, right? You buy a flight for a regular price, and then the other flight is $99. So it's a no brainer, and again, I think it's one of the best credit cards to have if you're in the West Coast, and even on the East Coast. I'm guessing you would pay a little more in miles, right? But if a flight to I don't know, Hawaii is $1,000, I guess the other flight would be $99, and it's actually a pretty good deal. So you're basically averaging two people flying to Hawaii for $500 round trip, and then you get the free bags, right? Up to 6 bags, dude. That's massive. Even one flight a year, one trip a year would basically would make up for that $75 annual fee. I think it's $90 or 95 now, but it more than makes up for it. So good looks on that. All right, so back to our stocks talk, right? Um, Hoping for the best, right? Volatility is going to be up, and I think hoping for the best will be one of those things where we kind of we all have to do, right? Because we want this market to go up, and also because just because you're in a bear market, it does not mean you're not gonna have weeks where the market goes up. It happens, right? We have green weeks sometimes in bear markets, and that's when you go and deploy your covered calls, right? You go at a strike that you're okay letting that stock go at, and then you take in that premium and make that money real. Whether you buy more stock or you pay your bills with it, that is all your prerogative. But again, make that stock pay rent in your portfolio building. That's the way that I see it, right? When I started today's video, I said that the way I look at my portfolio is as if it was a building, and look at the stocks as tenants. They have to pay you rent, man. And if they don't pay rent, they get evicted. It's that simple. All right. Um, the Bears are in charge, man. We were just at an 50, all-time high in the market, but we were frothy. And now with volatility, um, downward pressure, and um, interest as high as they are, having an executive branch that just is failing to work well with other countries that are partners and been partners, historic, partners. It's just not a good look. I'm not being political here. I'm just talking facts, right? So that causes a friction, and you don't want to cause friction with your partners. Think of it as your household, right? You don't want friction with your wife, your kids. It's just negative. And overall, it's just not a good look. So um, have cash on hand. Have cash on hand so that you can deploy cash secure puts, and look at monthlies. I wouldn't do weeklies just because there's downward pressure, and I personally don't like weeklies. I like taking big chunks, right? If I'm going to buy a stock, say for $10, I don't want 20 cents. I want $1. I want 10%. And I'm not going to choose a strike. Let's say the stock is, $10. I'm not going to choose the $10 strike. I'm going to look at the $9 strike, the $8 strike. so that if there's downward pressure, right, um, I don't get the stock for 10% or 20% less. I get it for 25% less, 30% less when it comes to like combining the strike price and the premium. Then you take what the cost basis would be. So then in reality, the stock is $10. I'm looking to buy it for 9 and I get $1. So I'm realistically buying it right at $8. The stock is at 10. So if I'm okay buying it at 10, why in the world wouldn't I buy it for 20% less at $8, right? And then once I'm in at $8 is when I look for, some green weeks, and then I, instead of 8, I sell $9 covered calls for 3 months out, 4 months out, and then bring in another $1.50, $2. So, what does that do? That brings down my cost basis. And if for whatever reasons I get taken out, I get taken out for more than what I bought that stock at. And that's what you want to do. You want to deploy your cash secure puts, and you could take that cash secure put premium and buy at market price if you want, because at the end of the day, those are going to be free shares. That's the way you got to look at it, and you got to be okay with that. And it takes time. Some people think that by doing this a couple of months, you're already, are some type of genius, or if you have a great month, you're automatically, this wizard, this whiz. But that's not the way it works. You have to go through a couple of rough patches, and you have to be okay taking losses. You're going to fail. So let me just get that out of the way. You're going to fail. All right. That is just bottom line. You have to be okay with failing. You have to be okay with taking losses, because nobody's going to bat 1,000%. Nobody is going to bat 1,000%. But if you can keep your positives at 80%, 75%, and those wins outweigh your losses, that's a win, man. In the stock market, if you win 70% of the time, you are elite. Let me tell you that right now. You are elite. If you outperform the market by 10%, you're a good trader. I think Uncle Bruce in his channel has said it best. When he was coming up in the 70s, right? In the 80s, if a portfolio manager outdid the market by 10%, they were stars, right? Some of us are outperforming the market by 60% this year, 70%. I know people that have outperformed the market by 80%. Would that make you an absolute star, like elite MVP? I don't know, but I know that making 80% returns on your investments, it's fucking awesome in a year. So that's what you have to listen. It's not about home runs. Don't stop looking for the home runs. Stop looking for that one stock, that NVDA that's going to go from $5 to 1,000. Those are unicorns. Not saying that won't happen. Not saying that won't happen to you. But what I'm saying is stop looking for them. Take the small gains. Take the 10%, 20%, right? You do a covered call, and it's a 3-month covered call, and the stock takes a downturn, and next thing you know, you're 60%, in a couple of weeks, in a month, and then you still have 3 months or 2 months left on the life of your option. Buy it back, because you already made 50, 60% in less than half the time. So the numbers are in your favor. Deploy another covered call at a lesser strike so you can bring in more money. And then if it rebounds, right, you can always roll. But don't roll until you are really underwater, right? Like if you're 100%, 150%, of course. But also look at how much time you have left. Okay, sometimes the stocks take a downturn of 15% in a day, and you're automatically underwater. Wait to see what happens, right? I think Mr. Premium of the option, I think he's here right now. The amount of patience this fucking guy has is legendary. I've never seen somebody have as much patience as he does. And honestly, my goal is to come close. I know for a fact I will never reach his Buddha level of patience, but I know that if I can get close to it, I'm already at a win. This guy will sell covered calls for $1,000 and buy them back for 5 cents. I fucking love that. He will go and do a cash secure put on GME 6 months from out, and then on that last week he'll say, "I just bought it back for 5 cents. I took in $700." Like the amount of patience being displayed there. Like, don't look at me for guidance when it comes for patience, okay? Or two page. Look at Poto, okay? That guy right there, he has it, man. The level 99 Buddha patience that he has is legendary. So that's where I aspire, right? So be patient when it comes to cover calls and cash secure puts, right? Don't have knee jerk reactions. I would caution that sometimes when some stocks take a dip of like 30-40% in like a week, you get scared. You're like, holy shit, I just had $40,000 and now my portfolio is $25,000. I'm just going to sell everything and just take the $15,000 loss. That's the worst thing you can do, okay? Because it's not a real loss. It's just a paper loss. Give the market time to do what it does, which is go up. The market is designed, all these devices that it has, right? All the tools and devices placed around it are so that it goes up, right? You just have to have patience, and that's the number one thing. All right. But the bears are in charge. We have a possible recession coming up. Don't be scared of a recession. I know that a lot of people are saying, "Oh my God, a recession is looming. What am I going to do?" Fucking nothing. Keep doing what you've been doing. Keep going to work. Keep taking your check, stashing it in your bank account, taking some of that money, putting it in your brokerage. I'm sorry, guys. My nose is itchy. I don't know why. I don't know if it's dust. I have the fan going here, so maybe some of the dust in here, but my nose gets itchy sometimes. So yeah, say take some of that money, right, and put it to work. If we have a recession, that means that we have opportunity, man. There's this symbol, I think, in Mandarin, right, in China. It's the symbol for chaos. I don't know what it looks like. You can look it up on Google, but it's the same symbol that they use for opportunity. So chaos and opportunity are the same, right? Chaos equals cash, man. Chaos is cash, because when everybody else is jumping ship, when everybody else is scared looking for a life raft, right? That's when you jump in with all the cash that you have set aside and just buy stocks on the cheap. Buy some cheapies. Imagine going back to a couple of years back and buying SoFi at 4, Palantir at 6 or 7, right? AI at 10, Unity at 12, $13, Roblox at 22. Neo was like $1. I could go on and on, right? But the bottom line is that you can't be scared of volatility, and you can't be scared um, of some downturn in the economy, because that's when the opportunity comes knocking, and that's when you can take bigger positions with less cash. And that's exactly why we do this, right? That's why we sell covered calls and protect ourselves and cover ourselves, right? So that we can take advantage of volatility. Um, I can see green weeks ahead, especially after these next few days with NVIDIA having their yearly event. But it doesn't mean we're gonna be in a bull market. It You can have green weeks in bearish markets. but I see that the next week is probably going to be a little positive. Especially after Chuck Schumer signed on to finance the government, for the next few months, right? So I think that's a little, sigh of relief for a lot of people. Some people in the political spectrums don't like it, but I'm not here there. I'm neither here nor there. I'm just looking at what's it going to do for the market, and I think it's a sigh of relief. So I think that's going to help. Some little tailwinds here and there. Um, but remember, I think the Fed has. I think Jerome Powell speaks this week, right? I think on Wednesday. Let's see what he says. You know, I don't know if you guys have noticed, but you have to pay attention at what he says. The first few words he says when he goes into the lectern. If he says, "Good afternoon," right? As opposed to I forgot what other phrase he uses, but there's two phrases that he uses. One advises you to sell off right away, and the other one is the dovish stance. So I can't paraphrase, but I just know the good afternoon one, and I don't know which is that one. But if you guys look at that and actually go and Google what that means and what the markets do after he says those words, it's a trip, but it's psychology of the market. I would be ready to that for that because I would be ready to like with my finger on the sell button for covered calls, um, for like I don't know 2026, right? Sell some covered calls on your positions for 2026 based on those words that he says as he takes the lectern, because that's actually a giveaway. What is he gonna say? I don't know, right? Um, do we see rate cuts coming up this year? Um, if we keep having volatility, if the economy keeps contracting, and that's what it's done the last few weeks, is contracting. I think in the past few months, I think we have some cash. I'm sorry. I think we have some tax cuts coming up with Trump, and I think that we also will have some rate cuts um, coming up with Powell. I don't know. I would be guessing, obviously, if I told you how many. But I don't think three or four would be out of the question. You just can't cut too much too fast, right? But just look at the real estate market right now. Look at how much is being built, as opposed to how much available housing there is, right? There's not many companies that are taking risks right now with interest rates being as high as they are right now because we don't know what the market's going to do, right? And it would be silly for a company to take on a $100 million loan at 7.5%. When if they wait a couple of months, they could take $100 loan out for 6%. We're talking about millions of dollars in interest. So that's exactly why companies are kind of nervous about starting new projects, right? And so let's look at what happens with that. Um, Now, if you are a long-term investor, right? If you're long on your companies, um, does it really matter what he says though, right? Jerome Powell. Um, do we really care about rate cuts? We're long, right? SoFi. Do we really care if SoFi is $10 or nine? If in 5 years it's going to be $100, will that make or break your bank? I would say no. I would say if you're looking at companies and they're near their 52-week lows at this point, dip your toe in the water. RXRX is a company that I'm invested in, and I went into the market price and bought some shares. On last week on Wednesday, I think Wednesday or Tuesday. Um, and so I did a lot of cash secure puts that would put me, after it's all said and done, actually below the 52-week low. And so I'm okay getting assigned. If you're long Unity or AI, if you're long NVIDIA or Tesla, does it matter if Tesla's, $240 or $230 if eventually it's going to be $1,000 a share? You're splitting hairs at this point. So if you're going to take a position and you're just looking at, the best time to get in, it's really hard to time it. Um, this is why I always say, time in the market will always outdo and outperform trying to time the market. Because if you are long, it doesn't matter whether you get in at $8 or $9, right? It matters that you're going to sell in the future for 50 or 100. That's where you should be uh, having your attention at, right? That's where your eye should be on the price, right? I keep your eyes on the price. That's what your long term um, vision is. So dip your toe in the water. Don't be afraid to take uh, to take a position. And look, if you make a mistake, right, and you ended up timing it wrong, well, okay, so then you average down. Then you get shares cheaper than they are now. Instead of, you say you buy 100 shares of RXRX for $7 or $6, right? And then RXRX goes to 5. Buy 200 shares at 5 and average down to 533, right? I did that with SoFi, right? And so you you end up then being in a way better position long term because you end up having more shares, right? And that's what this game is about. Is about making money, and the more money, the better. So don't be afraid to make mistakes. Don't be afraid to have the market go against you. Just like, we are not afraid of the upside whenever stocks run and we end up, I sold, $12 cover calls for 2026 and they were underwater for like months. And I was like, shit, I'm $30,000, $40,000 underwater, right? But it's not real, right? It's just, there's so much time and anything can happen between then and 2026 and now in 2026. And so I know Poto has some eights and nines that he sold. And he's folding his arms because he knows at the end of the day, he is making money. And he already made premiums that he used to buy more shares and add to his portfolio, whether it be SoFi, whether it be AI or GME, it doesn't matter. His eye is in the future, making more money than he has now. And he's not looking for the home run. The home runs are going to come. For example, AAOI. I was not expecting it to run 100% in a day last week. I took a position and I was okay with it, and it ran overnight and I made $3,000-$4,000, in a day, and on top of the premiums, right? Um, but what I'm saying is, I wasn't looking for it. I was trying to hit a single or a double, and the home run just happened. Home runs are going to happen if you just let them happen, right? Just do your thing. Just do your thing. Cross your arms. Sell your covered calls and wait for opportunity so that you can buy or you can sell cash secure puts on stocks that you want anyways, and make money. Look at RXRX, look at Neo, look at Unity, look at AI. I'm loading, baby. I am loading at this point. And if they go down, I load some more. There's what's the problem? I sold Palantir, Roblox, CoStar, and AAOI this past week. And I've taken all that cash, all those companies I sold for a really nice return, and I have a lot of money in hand. All right. And that's the name of the game. Now I have more money in hand to get into bigger positions with the companies I just named. Right. Rivian. Oh my God. Rivian is just, I'm licking my chops because right now it's in the tens. If it goes to 9, I'm going to back up the truck at 9 or 8 and then easily go for like 2,000 shares at market price, because then I will be selling covered calls as I am already. I sold some 12s for June, I think, and I took in like $1.50. So, dude, it's all about making money, and that's what I'm doing at this point. Um, Pays your duty. It's another one, baby. I'm loving it. Uh, I think Nvidia is another one. If you're looking at getting into Nvidia, wait for it to go to like 110, 105 and take a position. If it goes to like, 90, 95, add a little bit. If it goes to 80, oh my God, definitely add. So getting yourself, to a lower position, right? And don't be afraid of the stock going down, because that just means you can buy more shares at cheaper prices. Nvidia is going to be $200 a share. Mark my words, it'll be $200 a share. It may be $300 a share in a couple of years from now, but it's going to take time, and you can't hurry time. Take your position, be okay with the position you're at. Sell covered calls on days that the stocks move 10% or more, because that's when the volatility, right, is the highest, and that's when your premiums are going to be higher. And if it keeps going up, beautiful. Let yourself get taken out. Take that premium, take that cash, and then look at yourself, look at positioning yourself elsewhere, right? Or maybe pivoting, and then just waiting to see what happens, or waiting for a red day or a red week or red month, and then going and cashing your pudding on that same stock. Doesn't matter, man. It's all about making money, right? Um, so I don't see us going at higher highs, right? Like, I just don't see us going to 50,000 on the Dow anytime soon. I just don't see that. Um, could I be wrong? Of course. I hope I'm wrong, but it's just not the way that things are trending, right? Look at all the divergence in all the stocks, right? Look at all the macro and micro economic shifts we have right now, and look at all the instability all over the world. People are nervous. People are hoarding cash, right? People are not taking risks when it comes to small businesses, and even big corporations are holding more cash right now than ever before, right? Why? Why is uh oh my God, I'm drawing a blank right now. Warren Buffett. Warren Buffett. Why is he holding so much cash? Right? You think the guy doesn't have an idea how things work? He's been doing options for a lot longer than I'll tell you that. And he has an idea, right? Watch how Kathy Wood is trading, right? Dude, all that information is out there for you guys. All you have to do is just be curious enough and have intellectual curiosity to be like, let me see what's going on, and then just dive in, right? The internet is great, and then see trends. Um, so, like I said, NVIDIA and AI, NVIDIA is having this AI week in San Jose, right? Um, I think it's gonna prop the market up a bit. AI at least is. Um, Look for buying pressure, and then if there's buying pressure, then don't be afraid to deploy your covered calls. I think Nvidia went to like 124 last week, and I sold the one covered call for 2026 March, I think, and I took in I don't know, like 15, $16, something like that. So that's $1,600, and it was $160 cash secure, covered call. So I'm basically saying to the market, Nvidia's $125. I'm totally okay selling it for $160 a share. Give me $16,000 on January, right, 2026. But guess what? Give me 10% right now. Give me 10% right now, and we got a deal. And somebody did. Somebody did. Some dumbass dummy did. And, my average on NVIDIA is like 113 or something like that. So I'm selling for almost $5,000 more, right? And I'm bringing in $1,500. What is wrong with that? Absolutely nothing. So again, I'm okay with that, right? You have to be okay with the trades you make, and then let whatever happens happens. But at this point, I completely forget about Nvidia and move on. Cross my arms, right? See what happens in a couple of months. Now, if Nvidia goes to 90, $80, I'll buy that cover call back for like $3, $2, and make over $1,000 in a trade. And then average down, and instead of selling, one covered call, sell three, for 130 or 120 for 2027, and then bring in like another $15 per share. So now I have $4,500, and then add more to my position, and that's how we do it, right? Growing your portfolio, making those shares, be more than they were when you began the year, and so thus creating more opportunity for you to make more money. Um, so we've had 4 bad weeks, one great day. You tell me if that's a reversal. I think it's just a dead cat bounce. Um, the trend is your friend. Uh, we do have inflation. That's a thing, right? And slowdown in real estate. I just talked about it. Uh, it's going to be an option market's heaven, guys. And that's exactly what we can hope for, right? So keep adding to your positions and selling covered calls. I see us going maybe below 52-week highs on some stocks, or lows. I'm sorry, below 52-week lows on some stocks. Beautiful time to do cash secure puts, 6 months out to January or something, right? And bringing in a lot of cash. Use that volatility to your advantage and bring in a lot of premium. Um, Look, there's nothing wrong with holding, man. There's absolutely nothing wrong with holding, especially stock that you are long on. If you bought Tesla, at 200, 220, um, and you don't want to sell covered calls for whatever reason, um, nothing wrong with holding. You know, Tesla will be $300, $400, $500 a share, in the future. It's just going to take time. It's all up to you whether you want to use this time to make make it useful for you and make that stock pay rent, so that you can keep it in your portfolio, right? Or do you do nothing? You could absolutely do nothing and be okay with that. There's nothing wrong with just folding your arms, but um, make sure you accumulate, right? If Tesla takes a downturn to 150s and you bought it at 250, you liked the company at 250. Why wouldn't you buy more at 150? Because you're scared that it's going to go to 100? Well, that just makes no sense. Because if you were okay buying at 250, means that you knew from the information you have and the research you've done that Tesla is the future, right? And eventually, forgetting all the dumb shit that Elon has done, right? It's still a good company, right? It still has a future. And I think that, yes, Elon has done some really stupid things. I'm not advocating anything that he says or does, right? But I'm just looking at the company as a whole. And if the board decides to get rid of him, I think it would be a positive. And it may just happen that they do a hostile takeover. We never know what's going to happen, right? But the guy's a loose cannon, and he's costing his company he's cost $800 billion to his company in the last few months. $800 billion. I don't think some people realize just how much money $800 billion is. He's cost his shareholders $800 billion. I don't know what's going to happen. I know that taking an $800 billion loss has been absorbed, and the stock is kind of where it was last year. So it's not dead. I don't think Tesla's going away. We may have a downturn, right? But don't be afraid to add to your position, right? If Tesla goes to 150, I personally have $190 cover or cash secure puts um, that expire, I think, in 2027. I will be totally okay selling, 150s for 2026 even, and adding to my position. I would be okay if it goes to 120, 125. I would take out a loan if I have to against my house so that I can bring in $200,000, $225,000 and buy like 1,000 shares of Tesla at at 125 or 2,000 shares at 125. I don't know. It's just I would love to add Tesla at 125, 120. Um, Tariffs are a thing, right? But again, we just talked about tariffs. I think that they're going to work themselves out. It's just takes time, and people have to just get used to instability, right? I mean, the market doesn't like it, but it is what it is, and I think we're going to make a killing when it comes to options with the unstable character that the executive branch has displayed. Um, at the end of the day, recessions are healthy. We haven't had a recession for a while, and I think we have a recession every 10 years or so. So um, don't be afraid of a recession, man. Like I said before, um, this is why we have a cash on hand, right? So in case of a recession, man, I'm going hunting, guys. Put time to put the women and children to bed and go looking for fucking dinner, right? Because that's when we're gonna get most bang for our buck, and that's when we're going to definitely end up adding to our portfolios more money than we've ever dreamed of, and that's basically where I see a recession being positive, at least in the personal side, right? Um, just look for opportunities at this point. The market is oversold on some stocks, and I would caution you to look at stocks like AI and Unity, right? And the reason I say AI and Unity is because I have a vested interest in these, in the interest of full disclosure, but not just because of that, as it is the fact that I have over 100 hours of research on each of these companies, and I know where they are going. The Game Developers Conference is happening this week in San Francisco, as well as the um, Artificial Intelligence Expo in San Jose. So it's a big week for me as a shareholder, and I will be going to both, and I will be telling you what I see. Um, I am very excited to see about what AMD is doing. I'm very excited to talk to a lot of these developers, the game developers at the Game Developers Conference, see how they're using Unity. Last year, I talked to a lot of them, and I actually asked them flat out, "How do you like Unity?" And they said, "I fucking love it." Right? That's in my head what these guys were saying. They really were saying the same fucking thing, verbatim. I fucking love it. Okay, because it's just it's a great engine, man. It's a great engine, and people that are developers love it. They made a stupid mistake. The last CEO made a really, really fatal mistake, and he ended up getting fucking fired for that, right? But that's done. Unity has shown, right, year in, year out, that it's here to stay, and it's a $100 company, guys. Right now, it's like $20, $21. I've sold $20 cash secure puts for June already, bringing in more than $2 a share, $3 a share, because I do believe in this company, and I think that again, I'm going to go to the Game Developers Conference, and I'm going to talk to some of those game developers, and I'll be able to see more firsthand how these guys really feel about the engine. But nothing has changed, right? Everything is still the same with Unity, except they have another CEO that seems to be more um, in grasp with the uh, what the market wants, at least the Unity market wants, right? And I think we've found stability when it comes to Unity. The reason it's not $30 at this point is just because of the underlying market conditions. It was just at 27, $28, and it just went down because everything is selling off, right? Um, because people with margin call, there's a lot of investors, institutional investors that bought a Unity at 13, $14, and they sold at 26, 27, 25 because it was a win, and then they used that money to get out of whatever negative positions they're on, right? So again, Unity is kind of a victim of the underlying market conditions, and so is AI. But um, it's one of those that I'm gonna keep on pounding the table whenever it gets to $20, $19 a share. I pound the table because I really do like this company. I think it's one of those companies that's here to stay. It's a well managed company, and everything is the same. Nothing has changed. So if you like Unity at 30 and 35, why wouldn't you like it at 20? Um, this is the time for opportunities, and if we keep on downtrending, right? um just think of the future, right? Think of what we are seeing. Think where we are going, right? Look at banking, man. Banking as we knew it in the 80s is dead. Look at digital banking. When was the last time you personally went into a bank and talked to a teller about issues with your uh, with your checking account? I haven't deposited a check in years. I take a picture of the checks that I get from work, and it gets deposited within the next day. I have direct deposit when it comes to work, and for whatever reasons, if sometimes they send me a check, but for the most part, with most of the employers that I work, they will do digital banking, right? It's automatic, and I have my money way quicker than I would if I get the hard copy check, right? Um, Look at healthcare and AI, right? Do you see that bridge between healthcare imaging? I mean, healthcare and AI. Look at digital imaging. Look at MRIs, right? Look at a doctor doesn't have to be in the room with you anymore in order for them to diagnose illnesses, right? At least the everyday illnesses like a flu, a stomach a bug, some type of um, virus, or you need some medication. They're able to just see and ask you how you're feeling, and they'll prescribe the medications that get mailed to your house now, right? Um, of course, if you have an infection of some sort, the doctor needs to see you, but healthcare has changed as a whole, right? So look at companies that are becoming hybrids, that are bringing together pharmaceuticals and AI. Companies like RxRx, right? Um, Companies like SoFi and digital banking, right? SoFi keeps growing. It keeps growing and it keeps growing. And when it starts to cannibalize smaller banks, buddy, we're off to the races. SoFi will be $100 a share. It's just a question of when, right? AI. AI C3.ai is a monster. It is a monster. Okay. Um, Personally, I think it's better than Palantir because of relationships with the White House. Palantir went up to $100, a lot faster than C3.ai did. But it doesn't mean C3.ai is not worth $100 a share. However, the stock is what it is, right? You are what you are. So here we have it at $21, $20. That's what it is. How better time to invest? there will never be on C3.ai. I'll tell you that right now. If we have a downtrend and we go to 15, 16, I am backing up the truck, my friends. Backing up the truck again. Because I already backed up the truck when it hit 10 and 11. Totally okay doing it again. Um, Same thing with SoFi. If SoFi goes to 8 and $9 a share, we know where it can go. We know where it can go, but the underlying market conditions make it so that it takes a hit and it goes down with the market, right? But at the end of the day, we know what we hold, and that's the thing, right? Know what you hold. Know why you invested into these companies, and don't be afraid to add to your position at a lower strike price than it is right now. Um, I'm going to leave you guys with this, right? And we'll touch on the stocks really quickly, right? Rivian, like I said, I like. It's at around 10.75 right now. If you like Rivian, I would definitely look at the $10 cash secure puts. Um, don't be afraid to do some buy rights and maybe sell 12s for June and bring in some cash, right? Rivian is a beautiful company. It's a beautiful car, and I like it. My goal is to use Rivian covered call and cash secure put money to buy me a Rivian in the next 2 years. That's the goal, my friends. And when that happens, I'm not saying if, when that happens, I'm going to take some pictures and I'm going to put them up in the Discord so you guys can see my beautiful Rivian, because it's a nice car. I have a large family and we take some awesome trips. And everywhere we go, there's EV charging. So why not do it? You know, but I just don't want to come out of pocket with my own money, my hard-earned money, and buy a Rivian. I want my Rivian stock to pay for my Rivian, and God damn it, I'm going to do it. All right. Um, Rivian is a good company. Again, look at the underlying market conditions. Little divergence, but I think this is a good entry point. If it goes to 9 or 8 even, back up the truck. Rivian is going to $50 a share in the future. It's just a matter of time, right? Again, people are very disillusioned with Tesla, and guess where they're going to jump to? There it is. NVDA, I already talked about ad nauseum, right? If you like NVIDIA, if you liked it at 130, 140, 150, why wouldn't you like it at 110, 100? If it gets to 100, don't be afraid to pull the trigger on some cash secure puts for 2026. You know, do 90s, even 100. Go in the money, and bring in $15, $20. Why not? So that you can essentially buy Rivian, NVIDIA for $80, $85. Why not? And if it goes even lower, then average in, right? And buy some, at market price, or do some covered calls at 70, 60. And always just keep getting money for having these companies in your portfolio. Make them pay rent, right? SoFi, again, I've been talking about SoFi. It's $12 right now, right? I see a little pullback, man. There's a divergence. I think the volume has been low. The price is going up. Kathy Wood getting rid of 4.7 million shares. It didn't help, right? And so those shares are somewhere right now. I think there's going to be a little profit taken, especially if a lot of stocks, the AI stocks start flying, and then other stocks, they start flailing. I look for people to take profit. And so if it hits the $11 mark, don't be afraid of $11 cash secure puts to 2026, $10 cash secure puts to 2026. Bring in some dough. and make your stock pay rent, right? If you hold SoFi and your average is in the 10, 9, sell some 12s for 2026. Sell some 15s for 2027, and cross your arms. Hope you get taken out so that you can make some money, right? Keep adding to your position. Use that premium to pay your bills. Make it real. Pay your car note with that. Pay your mortgage. Pay your rent. And then make it real. And then that way, if we do hit a downturn, you at least could say, "This makes me feel good personally." It's when I use $3,000-4,000 to pay for the mortgage, and and I make it real, and I say, "Oh, look, the stock market is down." Um, but guess who paid their mortgage with stock premium, right? And so that's just the way I look at things, and it keeps me sane, as well as it makes it tangible. And again, anybody that knows me knows I like to take my little trips. I like to go with the family places. We like to go to nice restaurants, and I end up using premium money to pay for that, because that's the way it should be. I'm not going to take my hard earned cash um, to pay for credit card bills. That's just silly. I use my hard earned cash to put into the stock market, and automatically will go and sell some covered calls or some cash secure puts, bring in premium, and then buy more stock. And then once I have 100 shares, then sell covered calls on that, then use that premium to pay for things. So it's always a come up, you know. Um, Pager duty, one of the Savage 10. Yeah, man, it's I like pager duty. I told you guys that it was time to add pager duty. I don't know how many listen to me, but if you did, good for you. You made a couple of dollars. Um, Archer Aviation is it's a funny one, because I um I have, I think, $8 cash secure puts on it. I bought it at $5, right? So I've been making a killing with it, because I wrote it. I think I wrote $8 covered calls for 3 months out, a couple of months back, and then it started scaling down. So, or it started going up, and then I rolled for like $1.50, and I rolled again for like another dollar. So I've been bringing in premium, and then I came back from 2026 15s to 10s in, I think, October, and then I came back down to 8s in I want to say June. And so I've just been killing them with the premiums. But Archer Aviation, I see it going back to 7, 6 maybe. And in which case it's just consolidating at that point. I don't see any negatives with selling some $6 cash secure puts for like 2026 and bringing in a buck or two of profit, and then using that premium to buy shares at market price, or making that money real, and then using it to pay for some of your bills. Why not? um so again, there's a divergence in Archer Aviation. I see a lot of positives with it, but again, it moved up so fast, right? And now it's just scaling back down to where it's supposed to be. I think it deserves to be in the $7 land at this point, maybe even the sixes, right? In based on underlying market conditions, and however it does, with the quarterly earnings, um, it's going to then go up again. But I do see a future with this company. It's I like what they do, right? I like the single man um, aviation devices that they have. It's pretty fucking cool. And I just see, do I see myself using one of them in the future? I do. I do see my fat ass in one of them. I mean, again, it depends on what weight limit it has, right? But I see myself in one of those, air vehicles going down the San Francisco Bay and looking at the um, Golden Gate. Funny story. I have a friend that's a pilot, and a couple of years back, well, actually a lot of years back, One of the first dates that I had with my wife was this buddy of mine has a Cessna plane, and we went on a nice trip around the Bay Area. He had his plane at this one airport, and then we just took off, right? And then when we were up in the air, he said, "Hey, do you want to fly?" And I've gone and actually flown with him a couple of times. So I scared my wife into thinking I'd never flown before, and I said, "Oh, I've never done it, but I'd love to do it." And then he gives me, the controls, and I'm flying, and I'm turning around the San Francisco Golden Gate Bridge up. We can see we're like at 12,000 feet or so, and then we're turning around, and then I'm telling my wife, "Oh my God, it's shaking. I don't know, it's something's wrong." And she was so scared, and she had fun. She had fun. We went on a nice dinner date that time, but it was a lot of fun, and so flying is one of those things where it's not something I do often, but it's quite a thing, man. If you can ever go, if you have somebody, or you can actually pay for the experience, right? There's some companies that go around, you know um, touristy places, right? And they will take you up in the air for a couple of hours in a little Cessna plane so that you can, fly. I think they charge like $200 an hour or something like $300. I don't know what the market is like where you guys live, but if you ever get to do something like that, I suggest you do because it's quite a thrill, and it's a lot of fun, especially if you can take a significant other, and have that experience. It's we still talk about it to this day, and I still haven't told my wife that I've flown before. So to this day, she just once in a while we'll bring it up, and she'll hit me on the shoulder and say, "I can't believe you almost crashed us that day." But anyways, I like Archer Aviation. I see myself using it. Maybe not buying one, but definitely taking a trip in one of those. I think it would be cool. C3.ai, I've told you guys, man, it's my baby. I liked it. I took a position for the first time ever a few years back when it was 30, and I wrote it down to like 15s, 10s, and I wrote it back up. And it's such a beautiful stock for an option writer because it's when the premiums go crazy, the IV goes crazy. It's one of those stocks that will give you 10, 15% premium on a 1 month cover call, and I love it because it's a company I believe in. It's a company I see myself holding for 5, 6 years, 10 years, and it's made me a lot of money, and I hope it keeps on making me money. So I'm going to keep adding. Um, I think I sold some $20 covered calls for May or June too, and so I'm okay adding at 18, even if it means averaging up. I uh, I like the stock, man. All right, here we go. Oh, did I go down? Oh shoot. I hope my it looks like my signal faded for a second there. Sorry guys. Let's see here. Oh man, something's not responding. Anyway, so it looks like my computer is not responding. I think the signal dropped for a second. But it looks like I'm back on the phone here. So guys, like I said, man, whether it be Rivian AI, Microsoft, Unity, Tesla, NVDA, right? Even the SPY, man. Don't be afraid to take money off the table, especially if you've been holding. But don't be afraid to hold. Nothing wrong with holding a company that you're willing to have for 5, 10 years. You know, you guys know what stocks I like. I have my Savage 10, right? Um, I couldn't give you a forecast, right, on what like the market's gonna do. I can only talk about the specific um, stocks that I hold because again, I have first-hand experience with them, right? I'm always trading them, and I have a lot of time that I spend researching. But companies like RXRX, the stock is 635, right? It's been over $15, I think, or $14 at some point. Great company. It's a hybrid, for pharmaceutical company and AI, and it's the future, right? I know that there's a lot of companies that are big hitters that have contracts with them, and I really like the stock, right? It's a volatile stock. It's one of those that if you are new to the stock market, it will give you a pit in your stomach. But if you've been trading it as long as I have, and this is my second year trading it, um, it's a wonderful stock, man. It's making me a lot of money. The premiums are good. Uh, it's a 635. I don't see why would you would not write some $6 cash secure puts for like June, right? June or May, bring in some nice cash flow, and then hope you get assigned. And if in a couple of months the stock's at $5, and then you're underwater 40 cents, 30 cents, you can always roll, and bring in more premium, or you could get assigned and then write $7 covered calls for like 2026 and bring in $1. I mean, it's such a great stock to trade. I just sold, I believe, 10 covered calls on Friday because we had such a good day, and my average on RXRX is like five something. I sold $10 covered calls for 2026 for 10.50, I think, for a dollar. No, for $1.05. So I took in $1,050 um, for to sell RXRX for $10, which is almost twice what I paid for it, and I took in $1,000. What's wrong with that? Absolutely nothing. And those $1,000 I'm now using so that I can add to my cushion, because I have money on the sideline, for whatever, for whatever happens. I'm ready. I'm ready to go down 20, 25% on this market, and I'm ready to go up 20%. It doesn't matter. At the end of the day, I'm an option writer, and I'm here to make money. God damn it. So either take it by force, because if you don't, somebody else will. All right. Again, I'm going to leave you guys with this. Be optimistic, but be cautious, because it's a marathon at the end of the day, right? It's not a sprint. Everybody wants to get that home run. Everybody wants that Tesla, buy Tesla, that $20 stock that goes to $500. And it's not that they don't exist, it's that the possibilities and the chances of you buying it are very low, right? There's over 10,000 stocks trading at all times in this $5 trillion market. And to pick that one stock is a crapshoot, right? It's just as good as buying the lottery. So why be a dumbass and buy lottery tickets when you can be a casino and sell the lottery tickets? That's just the way I see it. Anyhow, I'm the Credit Savage. Thank you for tuning in, you knuckleheads. You guys gave me a couple of hours of your time. I really appreciate it. Hopefully, we have a good week. And we got, we can make some money. Like Poto says, time to add that paper, baby. Time to make that Skrilla scratch. Time to make some money. Time to bring in some income, right? And disposable income, which is even better. Um, Again, I gave you guys kind of an outlook, or a rough outlook on what my views are pertaining to stock market as I see it tomorrow. Again, it doesn't matter whether you're Warren Buffett or Jimmy Buffett, right? Nobody knows what the stock market's going to do. I do know one thing. If the stock market goes down, I'm going to make money. If the stock market goes up, I'm going to make money. And if I'm making money, I know you guys are making money. And that's the name of the game, baby. Um, Abigail Savage, remember, cash is king, baby, but credit is power. Peace.